Okay, so you're scrolling through your news feed, right? And suddenly, bam, this headline just hits you like a ton of bricks.
Yeah.
Global stock markets crash as Donald Trump's tariff tsunami wipes trillions. Like, just let that sink in for a second.
It's a hard one to wrap your head around.
It sounds absolutely enormous. And honestly, trying to figure out how this even, affects, you can feel like climbing Mount Everest.
Yeah, it's definitely overwhelming. And you're right, seeing phrases like global economy and stock markets constantly in the news, it can create this feeling of distance. You know?
Yeah.
Like it's this complex thing happening somewhere else that doesn't really relate to our daily lives.
Yeah, and that's exactly why we're doing this deep dive today. It's like your express pass to understanding all of this. So you shared some really insightful articles with us from India today and the Times of India. And I think our mission here is pretty clear. We need to break down this whole market crash that's been triggered by these new tariffs.
Exactly.
We want to understand what caused it, obviously, but also what are the consequences? What do people really need to know?
Yeah, absolutely. And your sources, they offered a really interesting perspective, particularly on how these global events are affecting the Indian markets and the broader economic situation there.
Okay, so let's get right to the heart of it. The thing that set this whole chain reaction in motion.
Right.
Donald Trump's decision to implement these new tariffs.
Right.
Okay, so help us unpack this a little bit. What exactly did this involve?
Well, the core of it, as your sources detail, is the implementation of what they're calling reciprocal tariffs.
Okay.
And these reciprocal tariffs, like the name suggests, are basically a response to what the U.S. administration sees as unfair trade practices by other countries.
I see.
So the idea is to impose similar tariffs on imports from countries that have their own tariffs on U.S. goods.
Okay.
Kind of trying to level the playing field or pressure those countries to reduce their own trade barriers.
Got it.
And initially, this has taken the form of a blanket 10% tariff on all goods coming into the United States.
10% on all imports, that's a really broad stroke, isn't it?
It is.
That would affect a huge range of goods.
Yeah.
But I also remember reading about significantly higher tariffs aimed at specific countries.
You're absolutely right. The reports highlight these much steeper country-specific tariffs that are potentially coming down the line.
Right.
So we're talking about possible duties of 54% on goods from China, 20% on imports from the European Union, and 24% on products coming from Japan.
Wow.
These are not small adjustments. They represent a substantial increase in the cost of goods from some of America's biggest trading partners.
Yeah, and from what I understand, Trump isn't exactly backing down from this. There was a quote about countries having to pay a lot of money, potentially up to 50%, to have these tariffs lifted. That's a pretty strong stance.
It's a very firm stance. And the reasoning coming from the White House is all about this idea of resetting America's position in global trade.
Okay.
They're arguing that these tariffs are a necessary tool to rebalance international trade relationships.
Right. But the global reaction hasn't exactly been one of agreement. One of the articles you shared even used the term economic blackmail to describe these policies.
Yeah, that's a pretty loaded term.
It is.
And it reflects the view of critics who are saying that this aggressive approach isn't really about fair trade.
Right.
They see it as a coercive tactic that could seriously destabilize the global economy.
And it definitely seems to have triggered a pretty dramatic reaction in the markets. The headlines weren't talking about a little dip. This was being described as a full-blown global market meltdown. It sounds like it wasn't just limited to one region either.
No, not at all. The sources paint a very clear picture of widespread turmoil on Monday, with markets across Asia, India, the United States, and Europe all experiencing significant declines.
Wow. So let's break it down. What happened where?
All right. Well, starting in Asia, Japan's Nikkei 225 saw a major downturn hitting its lowest point in 18 months and actually triggering circuit breakers.
And remind us what circuit breakers are.
Circuit breakers are basically mechanisms that temporarily halt trading when there's extreme volatility.
Right.
And this is the first time they'd been activated since March 2020.
Oh, wow.
And on top of that, the banking sector in Japan took a huge hit, losing almost a quarter of its market cap in just 3 trading sessions.
Ouch.
And in a really interesting response, Taiwan reportedly offered to completely eliminate their tariffs altogether.
That's pretty significant.
It really highlights how concerned some countries are about this.
What about other parts of Asia?
Well, Hong Kong's Hang Seng Index also had a rough day, recording its worst single-day drop since 1997, a decline of 13.22%. China's Shanghai Composite also experienced a big fall, its biggest since early 2020, down by 7.34%. And South Korea's Kospi wasn't spared either, dropping by 4.1%.
So pretty much a sea of red across all the major Asian markets.
Yeah, pretty much.
What about closer to home for a lot of our listeners in India? The article specifically mentioned the Sensex and Nifty.
Yeah, the Indian markets definitely felt the impact as well. Both the Sensex and Nifty crashed by over 5% in pre-open trading on Monday, to give you the exact numbers. The Sensex was down by around 2,497 points, and the Nifty 50 fell by about 807 points.
Wow.
But it's important to note that the Indian markets did manage to recover some of those losses later in the day.
Okay, so a bit of a roller coaster ride there.
It was.
What about the U.S. markets? We heard reports of the Nasdaq entering bear market territory. What exactly does that mean for people who might not be familiar with the term?
So entering a bear market basically means that a market index has fallen by 20% or more from its recent peak.
Okay.
And this is often seen as a sign that investor confidence is shifting and that we might be in for a longer downturn.
Right.
And while the Nasdaq hit this point on Friday, the broader S&P 500 also suffered some big losses, dropping almost 14% since the beginning of the year.
Yeah, and I think it was the U.S. markets that saw the steepest two-day decline since March 2020.
Yeah, that's right. They had a massive 10.5% drop, which wiped out nearly $5 trillion in market value.
$5 trillion in just 2 days. That's mind-boggling. And Europe didn't escape this downturn either, did it? No,
the negative sentiment was definitely global. The SDOXX 600, which tracks a lot of the large and mid-cap companies across Europe, fell by 5.72%, and that was their worst single trading session since, you guessed it, March 2020.
So a pretty widespread and significant drop across the board, and we also saw some hard numbers quantifying these losses. Trillions of dollars just vanished from global market capitalization. The India Today article actually gave a specific figure for the losses Indian investors experienced on that Monday.
Yeah, it was a staggering number. Indian investors lost around 14.2 lakh crore in market capitalization on April 7th alone. That was reported as the third biggest single-day market cap loss in Indian market history and the sixth biggest single-day points crash on the BSE Sensex.
Wow. So with this much volatility and these kinds of losses, the experts must be pretty worried. What are they saying about all of this?
Yeah, the overall mood is definitely one of caution. Dr. V.K. Vijaykumar from Geojit Financial Services put it really well. He said that global markets are going through a period of heightened volatility and that, frankly, no one has a clue how this whole tariff situation is going to play out.
Thanks.
He actually suggested that the best strategy right now is just to wait and watch.
That's not super reassuring, and I know there's been a lot of talk about the possibility of a global recession.
Yeah, a lot of the big investment banks, including JP Morgan and Goldman Sachs, they've actually increased their predictions for a U.S. recession because of all this. The main concern is that these tariffs and the potential for other countries to retaliate could really hurt global trade and economic activity, and that could lead to a widespread slowdown, or even worse, the dreaded stagflation.
Stagflation.
Which is basically a combination of stagnant economic growth and high inflation.
That sounds pretty awful.
It's not a good situation to be in.
And we also heard from some big names in the financial world, Larry Fink from BlackRock, for instance.
Right. Larry Fink said that many of the CEOs he talks to now believe that the U.S. is already in a recession. And he also expressed doubts about whether the Federal Reserve will be able to make any significant interest rate cuts this year, mainly because inflation might stay high.
Yeah, and it wasn't just cautious observations either. I remember a pretty stark warning from Bill Ackman, who I think used to be a supporter of Trump's policies.
That's right. Bill Ackman didn't mince words. He basically warned that the administration is flirting with an economic nuclear winter.
Economic nuclear winter. That's a scary thought.
It is. It really shows how worried some people are.
And this whole idea of fragile investor sentiment that seems to be a common thread in all of this.
Absolutely. Satish Chandra Alluri from Lemon Markets, he pointed out how delicate investor confidence is right now. And he suggested that if things escalate even further, we could be looking at a full-blown crisis. And I think the speed and the scale of the market reaction we've already seen really underlines that fragility.
So we've talked about what triggered this, the massive market falls and the concerns from the experts. Let's zoom in a little bit now. What kind of impact are these tariffs having on specific sectors and companies, particularly in India, since that was a focus of the articles you shared?
Sure. So the reports show a pretty clear pattern. Investors are selling off shares of companies that do a lot of business with the United States.
Makes sense.
The logic is pretty simple. Higher tariffs imposed by the U.S. mean increased costs for these companies, and potentially less demand for their products in the U.S. market,
Right.
which could hurt their profits.
So which sectors in India have been hit the hardest?
Several key sectors have seen some pretty significant declines in their share prices. These include the automobile and auto components industry, metal manufacturing, information technology, which makes sense since the U.S. is a huge market for Indian IT services, pharmaceuticals, textile manufacturing, and the precious stones and ornaments sector.
Those are all industries with strong ties to the U.S. economy.
Exactly, either directly or indirectly.
Yeah. Were there any specific big companies in India that saw particularly large drops in their value?
Yes, the Tata Group, which has a big presence in the U.S. across a lot of different industries, they reportedly experienced the biggest drop in their market capitalization since these tariff proposals first came out, losing something like 2.4 lakh crore. And the Reliance Industries Group also saw a significant decline in their market value, losing around 1.3 lakh crore.
That's a lot of money.
It is. It really shows you the tangible financial impact this is having on some of India's biggest companies.
So investors are definitely reacting, and it sounds like foreign investors were especially active in selling off Indian shares on Monday.
That's right. The Monday's sell-off in the Indian markets was largely driven by foreign institutional investors, or FIIs. They had a net outflow of a whopping 9,040 crore, which is over $1 billion US.
Oh.
And that's the second largest divestment by FIIs in the Indian market this year, which shows you how concerned they are about the potential fallout from these global trade tensions. But on the other hand, domestic institutional investors, or DIIs, they actually made net purchases of 12,122 crore.
Interesting. So the domestic investors are actually seeing this as a buying opportunity?
Yeah, it seems so. It might be that they have a better understanding of the Indian market's fundamentals, or maybe they have a longer investment horizon.
Right. Or it could be influenced by government policies or local market sentiment that we're not seeing in the global news.
Exactly.
It's a more complex picture than it might seem at first glance.
It is.
And that actually brings us to this idea that there might be a silver lining for India in all of this. Some analysts seem to be cautiously optimistic about India's long-term growth.
Yeah, despite the immediate market disruption, there are definitely some experts who are feeling positive about India's ability to weather this storm in the long run. Rajesh Bosal from Angel One. He suggested that if we see any signs of stabilization in the global economy, it could actually lead to a pretty strong recovery in the Indian markets.
And I think Narendra Solanki from Anand Rathi Shares, he actually has a specific target for the Nifty.
He does. He's maintained a 12-month target of 26,000 for the Nifty 50. He sees this current market turbulence as temporary, and he doesn't think it's going to derail India's underlying growth story.
So he believes that while investor confidence might take a hit in the short term, the strengths of the Indian economy will ultimately come through.
Exactly.
And Bala Subramanian from Aditya Birla Mutual Fund, he talked about why India might be relatively insulated from the worst of this.
Right. He pointed to a few key factors, like India's strong domestic economic fundamentals, the huge size of its internal market, and the fact that it's not directly affected by the specific tariff changes announced by the U.S.
So there's a sense that India is somewhat shielded from the full force of this tariff tsunami.
Yeah, that's the argument.
Okay, so we have a bit of a mixed bag here. Global markets are in turmoil, but there's some optimism about India's long-term resilience. Meanwhile, what's Trump's reaction to all of this? Is he showing any signs of concern or maybe reconsidering his approach?
Well, from what we're seeing in the reports, President Trump seems pretty unfazed by the market downturn. He's even been on social media telling people to stay strong and be patient, and dismissing any concerns as basically being weak or stupid. It seems like he's sticking to his guns on this one.
So no signs of a change of heart from the U.S. administration. We also saw that some of the countries directly targeted by these tariffs have started to respond. Taiwan, for example, offered to eliminate their tariffs entirely, and Italy pledged support for its industries that are being affected. What about India's official response?
Well, based on the information in your sources, India seems to be taking a cautious approach. An official statement said that talks are ongoing and we are evaluating our options, which suggests that they're waiting to see how things play out globally and exploring possible diplomatic solutions.
So they're not rushing into anything.
It seems not.
Okay, so we've covered a lot of ground today.
Yeah.
We started with that really attention-grabbing headline, and we dug into the tariffs that sparked this whole global market crash.
Right.
We looked at the impact on markets around the world, heard from financial experts who are worried about a potential recession and stagflation. We also examined the specific effects on key sectors and big companies in India and compared the reactions of foreign and domestic investors. And finally, we touched on the more optimistic views about India's long-term growth and the U.S. administration's stance.
That's a great summary, and it really highlights how interconnected the global economy is.
Yeah.
What happens in one part of the world can have these huge ripple effects everywhere else. And for anyone who wants to stay informed, understanding these connections is so important no matter what you do or what your interests are, because these economic shifts can affect everyone.
Absolutely. And I think this deep dive has really helped to make sense of a very complex situation.
I hope so.
So as we wrap up, here's a final thought for you to consider. Given the contrasting views we've discussed, the immediate global market turmoil on the one hand, and the longer-term optimism about India's resilience on the other, what do you think will ultimately determine the real lasting consequences of this tariff tsunami on the global economy? And where will India fit into that evolving landscape? What other unexpected consequences might we see as the situation continues to unfold? It's definitely something to keep thinking about.
For sure.
And that's it for our deep dive today.
Thanks for having me.
It was great having you. Thanks for listening, everybody, and we'll see you next time.
Bye.